So next up, we've got Katherine, who's the Senior Transition Specialist at FloodRe, and she is going to give a brief presentation about the insurance perspective. Thanks.
Yes, save you the death by PowerPoint and just leave you with 3 key points. And that's building off a point that Hugh made about the moment in time when the 2008 pit review happened after the 2007 floods. That was also when the groundwork was laid for FloodRe. And the reason that is germane to this conversation is that it was in that moment in time that the parameters were established to only use FloodRe as a tool to make flood insurance affordable for homes that were built before 2009. So for those of you who don't know exactly what FloodRe does, basically when Aviva or another insurance provider sells a homeowner policy to a homeowner in the floodplain, they will give us the slice of the risk that relates to flood risk if they so choose. And we will underwrite that cost for a fixed cost and cover claims as the reinsurer. However, it's their decision to cede the policy. So we don't see all flood risk policies at all. And there some of that is based on their different view of risk, which the presenters were discussing before we got on this call, because I think the data is still emerging, particularly with regards to surface water flooding on this topic. And then as I mentioned, when there is a claim, we will pay it back. But the key point here is that we do not underwrite any properties after 2009 to avoid the moral hazard of allowing people to plan for developments in the floodplain that aren't built resiliently. We all know that this isn't necessarily falling in line and that there are properties being built that are not as resilient as they should be. But it is for this reason that we wanted to make this point on this forum and in the other forums related to fluvial and coastal risk. And the 3 things I'd like you to take home with you today are: 1, that insurance is based on the level of the risk. And if the risk increases, the price of insurance on the property will increase. Therefore, the current and future risk to properties must be considered when we plan for new housing, as this will impact the ongoing affordability of the home. And the 3rd thing is that, putting those 2 together, is that if this isn't done, today's affordable housing will be tomorrow's blight. So why the insurance industry is brought to this conversation is that we are the financier who prices the cost of poor decisions in planning locations. And one other note that I will bring to bear is that the PRA, so the Bank of England, that regulates all the mortgage underwriters, is now beginning to ask mortgagors to assess mortgagees, so people taking out mortgages, for their current and future risk, because the lifetime of those mortgages now exceeds the expected life of FloodRe, which was put in place to only last until 2039, in the hopes that this market intervention would not be needed if the flood risk was reduced on a physical level, such that the price would also go down. This is an extremely challenging proposition in the face of climate change, but it behooves all of the planners to wrestle with this reality to an even greater extent. I'm happy to take any questions at the end, but those are the essence of the points that I wanted to make.